Hi, my name's Steve Walker from Promise Money. Loads of our clients ask us, how do I get the best loan rates? And there is no easy answer to that. There's lots of answers to that. So I'll just try and give you a little bit of a steer to what those might be. But what you have to do is you have to look at your entire circumstances and use all the options available to you. So don't just go looking for one particular type of loan, look at all of them. And the other thing is prepare. So the factors that are going to come into consideration are going to be, what's the purpose of the loan? Is it for business? Is it for personal use? If it's for business, are you going to go for a business loan, or are you going to go for a personal loan which you'll then inject into your business? Two ways of doing it. How good are your accounts, or what's your personal income like? Your accounts and personal income could be two totally different things. Then we've got factors like, well, are you going for an unsecured loan, or are you offering security? So an unsecured loan is exactly what it says. It's unsecured. It's very much dependent on your credit score and credit search. Whereas a secured loan, you're offering security, which could be commercial premises, it could be your home, it could be an investment property you own, or something like that. And you could be looking at a secured loan or a remortgage, which opens up a whole load of different questions and options for you. But as a guide, the more security you've got, the better your credit history is, the better your affordability is, the more options you're going to have, and the better rates you're likely to find. And there is no one magic lender that you can go to and they're going to say, right, well, we do the best of everything, because that it simply doesn't work that way. I mean, on our panel, we've probably got well over 10,000 different loan products, and each one is subtly different depending on the borrower. So it's how do you narrow that down to find the right one for you? I think the other thing is prepare. So if you're sitting down now thinking, I'm going to be needing some finance at some point in the future, whether it's unsecured or secured, prepare. So think about, how am I going to evidence income? And am I going to be able to evidence enough income? So for instance, if you're self-employed, you might be thinking, well, the more income I put into this year's accounts, the more tax I'm going to pay. But if you think you're borrowing in the near future, well, the more income you put into this year's accounts and don't hold it back for next year, the better chance you've got of borrowing. So you need to think about how you prepare your affordability piece. If you're PAYE, you're employed, it doesn't really make an awful lot of difference. But if you're about to get a new job, that could work against you because you might be in a probation period, or it could work for you because you're going to be on a higher income. So there's those factors to take into consideration as well. Your credit history is important. If you're thinking of an unsecured loan, for example, then a lot of unsecured lenders just rely on a number, credit score. They have other factors as well, and the lenders have their own scores as well, but they rely on that number. But your credit score is not the important thing, because behind that, what you don't often see is information like this, which is a credit search from 3 different agencies, and you can see that they differ. So these two here show that the loan is in arrangement. That's the orange bits. This one shows it's fine. So if a lender uses this one and not these two, you're going to be fine. But if the lender uses that one, then it doesn't look so good. So you need to get one of these and understand what your credit history looks like. Not your score, it's just a number. Because a lot of lenders, most specialist lenders, don't credit score. They look at the raw data. That's one account. They'll look at that account. They'll look at your CCJs, your defaults, etc. They manually underwrite. So credit score isn't everything. Get yourself one of these. They're free, by the way. If you go to, there's a link just around this video, and you'll find a link there to get my free credit search. It's free for 30 days. So if you can get one of these right away, it's free, and then cancel. It won't cost you a penny. So I'd thoroughly recommend you do that. So prepare yourself in terms of affordability, prepare yourself in terms of your credit search, get that as good as it can be. If you've got CCJs or defaults or anything like that in the past which you've paid off but you haven't satisfied them, that's an administrative thing. Get them satisfied. So there's lots you can do there. Once you've done that, it's really about demonstrating to a lender stability, creditworthiness, affordability. And the one tip I would give you is, don't do loads of applications to loads of different lenders, because each one of those lenders will potentially do a credit search which could harm your credit score. because your credit score is still important. It's just not the be all and end all. So don't do multiple searches. If you're onto a comparison site and you go lender A, no, lender B, no. If lender A said no, then lender B might say no too, because they're going to be very, very similar. What you really need to do is find a range of lenders where you can do one application and lots of different lenders will be considered, and there's underwriting before you get to that point of applying, and that does exist. So if I just quickly run through the key points: get your credit search right, use equity if you've got it, but you don't have to. But if you have got it, talk to a broker about, could I remortgage? Could I get a secured loan? If you're going down the unsecured route, then it's less important. Think about your income and how that's going to be presented, and are you showing stability and affordability? Always talk to a broker if you think of doing anything secured. If you're going down the unsecured route, then obviously avoid multiple searches and try to use a facility which is going to give you multiple choices through one application. What we have got, again, there's a link below this video. It's called the Loan and Mortgage Guide, and what that will do, it will take you through a series of videos and questions and ask you questions which will then guide you to the next step and help you narrow down perhaps which way you should be going. So I thoroughly recommend have a look at the Loan and Mortgage Guide. You'll find it underneath this video. Check out our other YouTube videos as well. If you're watching this, you're on YouTube, there's some really good videos on there which, depending on what you're looking to do, whether you're a property investor, you're looking to buy your first home or a new home, you're looking to raise capital for your business, you're looking to remortgage a commercial building, you're looking for bridging finance, you're a property investor and you want to build a load of houses, whatever you're looking for, there's a load of videos on there for you. So do go and check that out and subscribe, and then you'll get updated on new products as and when they come live. But for now, do check out the free credit search. Just around this video you'll find a link, and do check out the Loan and Mortgage Guide. It's just going to ask you questions and take you through a series of videos until you arrive at a place where it might help you decide which is the best way for you to go. So I'm sorry I haven't been able to give you a definitive answer. That's because there isn't one, because everybody's different. But I hope you found that helpful, and we'll talk again soon. Cheers, bye bye.